Hi, everybody. I'm excited to be with you today, launching the Reuters webinar series. Can't wait to introduce you to our esteemed panelists today. And the topic that we get to cover is capture, expand, and retain, how to ensure growth and preserve profitability. One that is actually near and dear to my heart because having formerly run innovation, I think when the going gets tough, it's always an interesting dynamic to think about how we focus on furthering growth to ensure profitability. So with us today at this amazing event, we have Chris Rhodes, who is the Chief Insurance Officer of Next Insurance. We have Rose Hall, who is the SVP, Head of Innovation for America's AXA XL. We have Tom Fletcher, who's the SVP and Global Head of Data Science Services for Partner Re. And we have Amit Namalati, VP Digital Products for Northwestern Mutual. So you will all get to hear from them in a moment. I just wanted to high level cover the format for today. So for those of you listening and joining us live, we have a Q&A section. So the last part of the webinar will be devoted to questions and answers. And we've actually devoted about 50% of the time today to question and answer. So please, as you're hearing the panelists talk about these three topics, which I'm going to highlight in a moment, please feel free to leverage the question and answer function. Drop in your questions, and then we will spend the last part of the webinar today answering those. And before we begin, I just wanted to remind everyone that most of us will be attending the upcoming Reuters event of Insurance, AI, and Innovative Technology, April 12th to 13th in Chicago. So we would love it if you can join us there. So let's kind of break down this is such a broad-based topic, and I can't wait to hear from each of you all that are joining us today on, when the economy is in the status it's in, we're having a little bit of economic turmoil and conditions. How do we continue to drive innovation and innovation strategies, digital data? We're going to talk about all of that forward. And so the first kind of key topic we're going to cover is first mover advantage. So new distribution channels, how to outpace your competition, and ensure that we get the right kind of lead gen. The next topic that we'll be covering is how do you deepen customer loyalty? One that personally happened to me this week. How do you maintain your retention rates? How do you expand your current customer policies in a way that's data-driven? And I'll call it personalized to their customer. I'll actually replace the word need with wants, right, at that moment in time. And then the third key area is going to be data-driven decisions. And I think as an industry, we've always been data-driven, but how do we turn that data into these actionable insights and really surpassing customer journey expectations and to becoming an insight-driven culture? So with me today, we have these amazing panelists, and I would love to now kick it off to Chris. I would love to hear your views on any of these three topics.
Thank you, Lisa. I'll start briefly with just a quick overview. I've got 20 years of personal lines experience between MetLife and Farmers. Majority of that time early on in my career was spent in actuarial and finance-based roles. Majority of the latter part of that tenure was spent in P&L management roles. All things product management for personal lines, anything from state management to overseeing underwriting decisions, in addition to actuarial and predictive analytics teams. I recently joined Next Insurance as the Chief Customer Officer. Next is a technology-led insurance company focused on small business insurance. We affectionately all think of and know and love small businesses, but they're one of the forgotten parts of the economy often as we go through these various economic cycles. So a key focus of Next, thinking about how do we attract, retain, and drive customer loyalty through technology and data, is really ensuring that we understand the needs of the small business owner, understand what their challenges are, and really try to provide solutions that ease the burden on the customer and the agents or different distribution channels that they purchase through. And make sure that we're providing the right coverage given the different needs of the business. Quickly on just a few main ideas that we can expand upon later. Let's say thinking about distribution channels and meeting customers where they need to be. We're really making sure that we understand how to balance being both innovative but also being disciplined to ensure that we can provide the right coverage at a competitive cost. That means a couple things. One, it's understanding where we can automate data collection to ease the burden on the customer. And then also think about once we get some data on the customer and the business, how do we dynamically respond to that to reduce the number of questions we need to ask, and think about dynamic report ordering to be able to create risk selection that's sustainable for us as a business and be there long-term for our customers. On more back-end types of processes, we're thinking about ensuring that we've got the right customer dashboards to identify how customers reach out to us for service, for claims, and create a close feedback loop into our sales and product management processes to really ensure that we're there for customers, both meeting their needs and creating sustainable and stable pricing into the future.
Love that, Chris. Thank you for that overview. And one word that you just said, and I just wanted, before we segue into our next speaker, one word that you use, it's probably a common hashtag of mine, which is dynamic. And I would love it if you'd spend just like a little bit more kind of elaborating on how you connect this dynamic concept to, insurance has traditionally been static, like point in time. And, in that, dynamic, of course, it enables all these technology advances that we have. So I'd love it if you just click into that just a little bit more. I think we have a little bit more time.
Absolutely. I think that balance between being disciplined and innovative is a key concept that Next strives to deliver on, and is absolutely at the forefront of the company focus. What Next does not want to do is sacrifice collecting the information that properly assesses risk, properly classifies risk, and ensures that we can deliver the appropriate amount of coverage for a particular small business. To do that, it's really thoughtful design in the staging of the information that you collect. So it starts with understanding what's available in the public space about a particular business to really, I'll say, ease the burden initially on customers and agents on collecting any of that information. As we build a profile of the business from that automated data collection, we're now really synchronizing dynamic questions, thinking about additional questions that we need to ask to better assess the risk, along with, I'll say, dynamic report ordering and reaching out to third parties that have deeper information on the business that we'd like to know. And without giving away the secret sauce, right, there's obviously decisions that are made there based on how we're classifying businesses and risk early on in that process and that automated data collection, where we make decisions later on to decide to go deeper or not, whether we can see the ability to collect information from third parties, or whether we feel we should ask a question to a customer or an agent directly to go for further verification of that risk information that we're after. I think that thoughtful approach is really designed around that balance of discipline and innovation, which is ask the least number of questions possible, but don't sacrifice core pieces of information that you need for risk classification, risk selection, and then that's what creates the long-term price stability that both companies and customers are after.
Yeah, I love that. The artful design, right? Thank you so much for clicking in on that. It happens to be one of my favorite areas and topics of discussion. And just as a reminder to anyone listening in, the Q&A chat box is open, and I'd love to hear your questions and thoughts as our speakers are going through it. So next up, we have Rose Hall. Rose, would love for your lens on these three areas and how you, as head of Innovation for Americas and AXA XL, are approaching this growth but profitability. Over to you, Rose.
Right. Thanks so much, Lisa. Great comments, Chris. I'm going to take the polar other end of the spectrum, because we are a very large insurer that insures the largest and most complex property and casualty customers across the world. Actually, AXA XL is owned by AXA Group, a global P&C insurer. And so instead of focusing on the small business, we're actually focusing more on the large business, which the complexity of that makes everything you just talked about, Chris, the the customization and the real intricacies of addressing someone's unique small business is very hard to do at scale when you think of a larger business. So the challenges are definitely there, but I love everything you said about it. So by way of background, I am actually a civil engineer by background in education and spent many years in the construction field working for Turner Construction, which I was sitting in the risk management group at Turner. So we do a lot of business with companies of that size in our construction group. And so I have the unique perspective of having sat in the seat that our customers now sit in, which is a risk manager of a 10 to $14 billion company. So I remember what it was like working with our insurance business partners, and year over year across the decades and the cyclical wave of insurance, which is we expand, we contract, we hard market, soft market. So it's a really unique time, and I'm glad we're talking about innovation and data and analytics, because the role that I've taken on just now as head of innovation for the Americas stemmed from a role I had prior, head of construction innovation. And the whole job there was to delight the customer. So there's a lot of innovation departments inside insurance companies. It's starting to become what we do best because we have such tremendous data, especially the legacy insurers. We have such tremendous data that we've been thinking for years about how do we get smarter in data analytics and AI and machine learning, and how do we optimize our claims processes and our submission processes. And as Chris was saying, make sure we ask for just the right amount that doesn't become onerous, but we need to make sure that we have the right amount of information to categorize the risk properly. And these are the things we've been innovating on and iterating on for the last decade or two, since the internet, since some of these other digitized processes in insurance. But the approach that my department is taking is we have a department here actually for that type of innovation, and they're at the global level. So my localized group in the Americas is focused on the customer facing aspect. What can we build that not just optimizes our own processes and helps us pull in better submission data or process claims more quickly or analyze our losses more quickly? That is all fantastic, but it doesn't do much for the customer themselves. And so the approach that we're taking here is, how do we delight the customer? How do we use all of that innovation to create an experience for the customer that brings loyalty, stickiness, if you will, and attracts the right kind of risk, retains the right kind of risk, and even upsells our products. So if a customer comes to us for a construction insurance, hopefully they stay for the property insurance of that asset as it's built out into its operations, right? So we're creating a cross-sectional network across our America's business units that we call our ecosystem. It's a business ecosystem, and the idea is to connect all those parties together so that we are the preferred innovative insurer for those customers that come to us for one type of insurance, and we help them find the right technologies to use on that piece of property or with their business or on that asset or in that construction project. And so they're using these technologies, they're getting comfortable with technology, they're maybe even sharing their data with us so that we can better rate their risk year over year. We can see near misses, we can help not just analyze our own data, but help them analyze theirs and put those two things together and see what kind of insights we can gain and hopefully delight the customer. So the role here is to figure out what can we do with innovation and data analytics that not just benefits us, but benefits our customers. And if we can make our customers more successful, they can grow their business more profitably, they can better protect their risk at an enterprise level, and they really see us as their partner in all of that. We hope that translates to them staying with us as their preferred insurer year over year, project over project, business over business, and that will translate to our growth over time. So it's kind of a secondary effect of growing our business is helping our customers innovate and grow theirs.
So Rose, first of all, I love that. And I love your background and how you've gone from, I always tell people, like, I used to be that person sitting in the chair. So I understand the magnitude of this, not only decision, but the magnitude of this process that I'm going through on the other hand, because you get to, no better way than to walk a mile in those shoes. But one thing that you said that was incredibly interesting that I've also often talked about as kind of I'll call it a symptom or a problematic issue in the industry is when customer service and customer design and UX and CX and all this first became, digitally focused, and no disrespect, we all had to do it. We viewed it as a vertical, not a lateral. And you just articulated that, you and your team are actually, I heard you say this business ecosystem. You are viewing that as like an integrated across all business processes. And if you wouldn't mind just spending like 60 more seconds kind of talking about that, because I think that maybe for some of the participants on the phone, and again, we need customer experience, we need customer service. I'm not saying these things don't need to exist as their own verticals and functions, but it's that lateral nature of it that sometimes the customer feels like they went here and then they went to a totally different world. So love your perspective on that.
Yeah, so we have developed a network of ambassadors throughout the organization or throughout our region who sit inside each of our business units. So environmental and construction, property, aerospace, casualty, and so on and so forth. And they sit within their own organizations. So they are closer to the market. They are still talking to customers every day, but they're in this ambassador network of our ecosystem that is smart on the technologies we offer, the insurance policies that we offer that are paired with the technology, and some peer-to-peer networks that we offer for our customers. And so what we're doing by tying all these units together, we have our verticals, but by tying them together horizontally, we're becoming more of a partner for the customer. So a customer may come into this network looking for a property IoT solution that helps them prevent water leaks in their building, right? And then as they're discussing this with us, we have this whole suite of other technologies that are available to them. And they go, oh, as a matter of fact, I might benefit from this one. And I didn't know you offered casualty insurance. So maybe I'll take a look into that. And so it's a way to cross-sell throughout our organization with our common customers that we're probably talking to in those verticals anyway, but we're not necessarily connecting the dots. And what this does is it gives us an opportunity to have a conversation with a customer that is not purely about insurance, rates, premiums, or claims. We have those conversations every day. Like you said, they're a necessity. Customer service is a necessity. Claims are the product we deliver. We have to have these conversations. But in order to become a true partner in their business and a true partner in their risk, we have to go beyond just the requisite conversations of renewing the next policy and discussing our claims. We have to talk with them about the things that move their business forward, not just their insurance.
Yeah, I'm really inspired by how you all are delivering that. Would love to talk to you offline more about it. But so yeah, and again, I start to see the questions coming in. Great. Again, for those of you wanting to ask more, please keep them rolling in. On to our next panelist, Tom. Can't wait to hear your lens as how is Partner Re approaching this through a data science and data insights lens?
Yeah, thanks, Lisa, and thanks, Reuters, for putting this together, because I'm learning things as I'm hearing the other panelists, and I'm sure when we get to the Q&A, there's going to be more brilliant comments and thinking. Let me start off by saying my background is probably unique in the insurance industry. I was originally trained as an IO psychologist, an industrial organizational psychologist with a very strong background in statistics. So what that means is, I have behavioral science perspectives as well as data science perspectives when I approach problems. And what I liken that to is when people come to me with an analytics question, right? Or we have this idea of we want to do this analysis, or we want to build this model, we want to solve this problem. I always come back to how is it going to impact the people, and that seems obvious, but it's often overlooked. And I'm going to go through a few key points relevant to this and to today's conversation. But I've been in the research/analytics space for well over 20 years. I've been in insurance for over 15 years, working on almost every product line in P&C, surety, management liability, life, health, etc. And almost all aspects of problems across the whole value chain, or the customer journey, if you will. Everything from market evaluation to what makes the best agents, and how do we get agents to sell the products that we want them to claims management and creating efficiencies for organizations and so on and so forth. But the key points I'd like to hit on today are if we start talking about distribution, some things that I've observed through the years, right? First off, there's nothing wrong with KPIs and monitoring agent performance and this, that, and the other, but sometimes it's more nuanced, and we need to be aware that maybe things are outside of an agent's control, and we're assigning control to the agent that they may or may not have had anything to do. Maybe their performance, whatever we define performance is really market driven, and we need to disentangle the situation from the personal aspects of what's happening there. Many times people will take a data set and begin to analyze it and think, how do I identify my best agents? These are the ones that are doing whatever you want, whether it's selling products or retaining customers or so on and so forth. You want to make sure that your data are reliable, stable, credible, if you will, right? Especially when those data are used making decisions. So I've consulted on a number of projects where people are, hey, let's identify these agents and either reward them, that's one way to take, or punish them, right? Remove them from the process and so forth. But you need to be careful there. And this is where I think analytics professionals can help beyond just creating dashboards and looking at the data, but also controlling for various factors that you need to consider. Moving on from monitoring of the agencies, what is it that we do in our organizations that, for lack of a better way, hack them off or make them upset or create a divide between our agents, distribution partners, and the customers that they may bring to us? So transparency and explainability, I think, is paramount, right? We often will have the best intentions. We create a model. This model is supposed to be driving consistency, helping find opportunities, whatever the case may be. But when the agents don't know how to explain what the result or the outcome of the model is, that invites complications. Now, one thing I would stress is it doesn't mean that every numeric whatever has to be explained, but core factors, right? If someone's rates go up all of a sudden, there should be a reasonably transparent explanation for that. In the credit world, we think about certain rating factors that will explain why did my credit score go up or down, and I think in our underwriting models we owe that to our distribution partners and customers alike, and that will help bring them closer to us, get them to understand opportunities and efficiencies as well. Another topic I'll talk about is the change management topic. So if we're going to apply analytics to improve whatever processes in the organization, whether it's creating efficiencies, finding more customers, connecting the dots, as Rose was pointing out, for opportunities here or there, you often will hear things like most AI projects fail, or most modeling or analytics projects fail. I've even seen statistics that something like only 1 in 6 make it to the finish line. And you have to pause and ask, why is that? What are we doing that is causing such a high failure rate? And I would say that that's not universal, but it is quite prevalent. It's not universal because some people think through and go, is the organization ready for such change? Have we thought through this? Do we really understand what the impact on the people are? The people, the processes, the workflow, et cetera. Have we really thought through all of those considerations and communicated effectively that we're going to introduce this thing that's going to solve this problem for the organization? It's going to have some impact. I think when we don't recognize that it would bring impact, we're being naive. And quite frankly, a lot of organizations are not ready for that particular change at the time. So you have to go, how do we get ready? How do we think through this to make this initiative successful.
It's,
Uh,
it's interesting on that, Tom, if I just can weigh in and ask your point of view on this. I truly I used to focus on applied AI and, like, how do we get this into operations? And if you connect that with first mover advantage, right? Because like a lot of people will say, and let's just own it, right? Insurance is stodgy. They're not really, and I know we all on this call, we all love and push innovation forward. So it like hurts our heart to hear that, right? It's like, oh, really? You should see what we do. You should see our teams. You should see our companies. Like, we're so proud. But then if you look at the like kind of greater industry, I'll call it perception, and we have to own perception as our reality. There's this perception that we're not first movers per se. And so I would love to kind of on that change management, especially in today's day and age, it's like we need to do more. Right. And then there's this like, are we going to be first mover? Because not only do we have to create those change management and that transparency with people interacting with these techniques we're deploying, but we also are being compared to others in the industry, right? So like, are they doing it or are they not doing it? Sorry for that long-winded question, Tom, but I would love to hear your, maybe 60-second response to that.
Yeah, sure. And I was also going to get to some cultural things, which is related to your question, but to focus on that, I mean, where do customers' expectations come from? They certainly don't come from a process like buying life insurance, which is maybe a once in a lifetime, or at best 4 or 5 times in your life, you might go through that. It's online shopping, and I get instant gratification and so on and so forth. So when we're trying to improve that, we need to think through, again, there's an impact, there's an implication here and whatnot. With respect to adopting technology or any large scale innovation, what we often overlook, and it's not because people are being nefarious or lazy or whatever, it's just, hey, I didn't realize that. Who owns that, right? So is it the data scientist that owns the change management process? Is it the underwriting shop that's doing that? Who steps up and says, are we really ready for this change that we're trying to implement, the innovation that we're trying to introduce? And I think that leads a little bit of not being the first mover, right? I'll be a fast follower at best. But the psychology of the process should not be ignored is the point that I'm trying to get across, right? The people issues are real, and too often we will build something with all the best intentions and we just throw it over the fence, where the people on the other side of the fence just grab it and say, well, I don't know what to do with it, so I'm going to stick it in a drawer. And then people come to me and say, well, what impact can I expect out of this thing? And I was like, well, you stuck it in a drawer. So there's very little, there's zero impact that you're going to get out of that initiative. So it's why, it's always broader than just the tech aspects of what we're trying to accomplish, right?
For sure. Thank you so much for your insights. And I see more questions coming in, so I can't wait to get to those. But before we get to all the questions, I don't want to not leave you some time to focus in on, what you're doing at Northwestern Mutual and kind of how you're applying some of your techniques to these 3 key areas. So over to you.
Yeah, thank you, Lisa. So maybe a little bit of a introduction into my background. So I'm an engineer like Rose, and I have a couple of finance degrees along the way, but I've taken an unconventional path. I started in the oil and gas industry, ended up launching 3 startups, worked for a consultancy, and then ended up in the insurance space. And that journey in itself was interesting because here at Northwestern Mutual, as Tom mentioned, life insurance is not exciting or sexy, and you only buy it a handful of times. But we're in the life insurance business, right? We're in the business of solving for people's financial anxiety, whether through protect and prosper, protect being insurance, prosper being wealth. We try to provide an integrated solution. And when you think about life insurance and the propensity for people to buy or not buy, it's highly driven through client experience. Okay. If you don't get the experience right, they're not going to buy. Now, the other key component of that is insurance in general. And I have 2 finance degrees. Insurance is complicated. It's hard to understand. And you need people to be able to explain it, put it in Dr. Seuss language, frankly. Right. And when you think about it, right, that's where the distribution comes into play, whether it's through agents, whether it's direct to consumer, you've got to make it simple so that consumers understand what they're going to buy. And it's not one of those things where you just kind of buy for a couple of years and kind of say, yeah, I don't want to pay into it anymore. If you don't pay into it, you lose it, right? So there's a commitment. And so you've got to make this super complicated financial asset simple and easy and intuitive and relatable to their life events so that they have a propensity to buy that. So client experience is solid, is really critical. Distribution aspects are important because those sales agents do a wonderful job of connecting and simplifying the process of what this insurance products really are. At the backbone of all of this is data. Most insurance companies have been around for well over about 100 years. And they are sitting on tons and tons of data. And what you do with that data is critical, whether it's introducing accelerated underwriting so that your mortality numbers are better, or whether it's using the data to drive what you said, Lisa, the client's wants or personalization, right? And if you look at the demographics, our demographics are changing. People are becoming far more digital. They want to be able to do everything on their phone. They want to be able to go to one place and connect to everything. Think about it from a perspective of a super app. I want to log into an AXA app or a Northwestern Mutual app. I want to be able to access and go and get things from there. I don't want to go to 10 different apps, right? And that's when you think about the innovation aspect of it, that's critical. And so data-driven, absolutely paramount. It's something that you've got to do, whether it's from a personalization perspective or an analytic perspective. But underlying all of this is a foundational layer, okay? That's often overlooked. And what we've learned is that you got to stop thinking about things from an application and a systems perspective. But as Rose alluded to, you've got to think about it from an interconnected ecosystem perspective. That's critical because you could have an ecosystem that's focused on your advisors. You could have an ecosystem that's focused on your clients. You could have an ecosystem that's focused internally to all your servicing people, but they all have to be interconnected. That's a critical way to move forward to drive that engagement from your customers, from your advisors, that ultimately result in growth and profitability, because that's what it's all about, right? Creating lots of experiences, awesome experiences, but if they don't buy, is meaningless. So it's got to tie back to the profitability. The other aspect is really, when you look at the ecosystem, you've also got to look at sort of the operating model. And that's like a pretty vague topic, but when you think about it, how you operate day to day has to be consistent with the goal that you're trying to achieve. So often organizations, firms that have been around for 100+ years tend to be siloed. And so you got to break down the silos, which ties into sort of the change management. You've got to understand how to be able to work horizontally across and drive the type of outputs. It also impacts the way you fund. Lots of organizations think about funding on an annual basis as opposed to multi-year basis. Right? What am I going to fund? What initiative am I going to fund over the next 3 to 5 years? And that impacts the way you organize. So there's a foundational element you have to adjust and modify in addition to your distribution, your experience, your analytics and data-driven aspects. And the last component that's really paramount in all of this in trying to drive growth and innovation, growth and customer experience is really around innovation. And it's thinking about innovation that's 5, 7, 10 years out, because that's what's going to disrupt the insurance industry. You've got lots of insurtechs out there. They're coming with different solutions. And thinking about how does like ChatGPT tie into it, or the convergence of health and wealth into life insurance from all the wearables that are out there. Those are the types of things that will disrupt our industry. And those are the things that we should be experimenting on years and years in advance so that we learn from it and we can adjust to our consumers' preferences and needs and or our advisors' preferences and needs.
I love that. And I mean, I used to work in the life and health space for about a decade. And so certainly the future of, you used a great word that I love, which is, interconnected ecosystem. And I call it seamless interoperability. And I think that one thing that, and would love to hear your lens on this, especially in life, I think one thing that we've all been reacting to is this need to get an app out there, or this need to get a digital facing, like whatever that is, like, right, we've got to do something. But I'll say clunkiness of the interoperability of it is definitely present, and customers feel that, right? They definitely feel like, oh, I've got to go from this app to this app to this app, or I go here and then it's rerouting me, and I call it like they're seeing the the dirty laundry in our laundry room, right? Like, because they go into this experience that's started really great with all the proper intentions because we had to get to market, but it's that interoperability, and to your point, life insurance specifically, it's almost, to me, I could almost predict appism fatigue, because there's hundreds of thousands of subscriptions that any life insurer, wellness, health, whatever, could offer to its consumers. But how could a consumer even digest and interact with that many solutions? So that kind of comes into like hyper personalization, and maybe using data insights to kind of, I'll call it like a curated offering. And I'd love to know like how you all are thinking about that, right?
Yeah, you bring up a great point, Lisa. We're certainly competing with ourselves. But you know what we're competing with when you think about it from an experience of, for example, purchasing? You're competing with Amazon. Like each one of us on this panel has probably purchased something from Amazon all the time, right? And just think about it. You go on, you find it, you hit the buy button, and it shows up at your door tomorrow, right? When you buy something from any one of us, it doesn't show up on the door tomorrow, okay? It's not a one-click button. It doesn't predict what I'm interested in purchasing. Fair or not, that is what the average consumer has been spoiled with, right? And so, most insurance companies have decades of tech legacy. You can't go fix all of it all at the same time. That's impractical, right? You've got to understand what are the critical journeys that our consumers are need, and then laser focus in on addressing some of those things. And, the reality is tech debt dissipates over time. What you do behind the curtain doesn't really matter to the consumer. What you've got to control is the experience that they get. You can unload the tech debt over a generation or two over time, but as long as you're controlling that experience, because the experience they're getting from other industries in the marketplace that's outside of insurance is a heck of a lot better. And that's the challenge that we're dealing with.
And it's how to basically ring fence off, I'll call it the behind the scenes, from the customer experience, which, as Rose pointed out, it requires a much different way of thinking about customer experience. It can't just be this, I call it first point of service, or it can't just be the buy. It has to, and it can't just be the time of claim. It has to be this, I used to be a CFO, and I'm like, it goes all the way into the financials, right? Like everyone's like, why? And I'm like, it goes all the way to the ERP, like, all those things. But thank you all so much. And the questions are rolling in. So super excited to take these on. I will offer them up to the panelists, and, let's see which one of you wants to answer which. I might try to target some of them to your areas. The one that was really interesting coming from Dr. Mohammed Nizer is how the emerging technologies, which is great because I think, one of you just mentioned ChatGPT, and I was doing a webinar about that last week, but how the emerging technologies like AI, IoT, Rose was mentioning, Chris and Tom, you guys have all been talking about this. How has it changed the relationship? This is very relationship focused between insurance companies and customers, both inside and outside. Has the mission to protect and serve become easier or harder? So I'll offer that up. Maybe two of you could give a lens on that, and then we'll move to another question.
Maybe I'll take a stab at it quickly. I'll
Perfect.
throw out there that it has to advance that relationship. If it's anything other than that, don't use it. Okay. It's just technology. That's not a big deal, but it's got to enhance that experience. It's got to enhance that trusted relationship that an insurance company has with its customer. Bottom line.
I think there's a side piece to contemplate as well, and that is there's sort of counterposing forces here, right? We want to make the experience better for customers. We want to make it faster. Why does it take 3 months to go through life insurance, buying process and so on and so forth? So we can speed all of that up. But at the same time, we're speeding that up. We're using things that are not always as transparent as perhaps they could or should be, right? Which is causing consternation amongst the consumer advocates. Are going, are we being fair as an industry? The regulators are popping their heads up and saying, are you being fair in how you're using data and tools and so on and so forth? And I mean, generally, I believe that we are, but I don't think as an industry, we're being clear about how these things work, so that we don't want to create a situation where consumers distrust the industry because, well, we don't know what you're doing, how you're making decisions, and so on and so forth. So there's this balance between doing it on behalf of customers to get efficient and meet their needs, and also doing it fairly so that they don't lose trust in how we operate as an industry.
And I saw, Rose, I saw your hand up, and there's another one in here that's talking about differentiated CX outcomes by Ashish. How could it be achieved by insurers? So maybe you can weigh in on that and then take this other one, which is, would you say better incentives, flawless IT interoperability, or customer-centric design? So I'll let you take the tail end of that one plus this one, if you don't mind.
All right. Well, it kind of all folds into a thought I've been thinking about since Amit was talking, and it's got to do with, yes, we're competing against Amazon and Google and those types of instant gratification platforms, which I love that you said that, because I've been saying that forever. People say, what is your vision for this? What is your vision for XXL? And I said, I don't want to compete with Liberty and Zurich. I want to compete with Amazon and Google. I've been saying that for years. But there's a nuance there that is a little bit different, right? So if you go online today, you press, I want a box of Q-tips, and it shows up at your door the next day. You actually don't want customer service for that. You just want the Q-tips to show up tomorrow, right? And so there's this balance. And the example I like to use is QR codes for restaurants. This was a brilliant innovation that came up because of COVID. Nobody wanted to touch a menu. It worked beautifully during COVID. But now that we are past some of those fears of tactile transmission of viruses, some restaurants are still using QR codes. Now, if you go into In-N-Out or McDonald's, do you want a QR code so you don't have to stand online? You can order your burger and fries? Probably. But if you're going to Capital Grille, you probably don't want a QR code, because you want the luxurious experience of the menu and sliding it over to your partner over there and saying, hey, what do you think about this? Should we get this appetizer? And you don't want to be on your phones. You're having an experience with other humans. And it's in both situations, you're ordering food and you're consuming food. But they are completely different customer experiences, because in one, it's a transactional movement that you would actually probably prefer not to have human interaction with. I just want a burger and fries so I can go do my next thing. And the other one, what you're there for is the customer experience. So when we talk about, going back to your question, Lisa, about user experience and digitizing and CX, it's about, and the UX, right, and the UI. So you take that digital customer experience and you're morphing it with the personal customer experience. Let's not over tech it. Let's not put a QR code on a Capital Grille menu, right? Let's make sure that we're providing the level of digitization that the customer wants and expects in the place that they want and expect it, and make sure that we're providing the personal experience in the place that they're expecting that. And that takes a little bit of mind reading, but I think we'll get it right at some point. But it's a nuance that I just wanted to point out.
No, I love that. And I want to, just 1 second, Tom, because I want to get one to Chris too. But on this, Rose, I just personally experienced something, it was in the PNC world, and it was so overtaxed. And I was like, but that's not what happened to me. I need to exit out of this and get to a human. And I literally couldn't. And
Yep.
I was so just demoralized by this experience. So to your point, and the menu is such a great example. I literally take a family vacation once a year with my family, and we go to this very nice place, and they were all using the QR codes. I'm like, can I see a printed menu, please? Can you just give me a printed menu? So totally can relate to that. Tom, over to you for 60 seconds. And then I have 2 coming up for Chris that I want to make sure he gets time to answer too.
Yeah, I won't even take 60 seconds. Rose triggered this thought in my head is that we want to be careful that we're not imposing our values on what we assume are our customers' values as well, right? So we have our perspectives. Maybe it's, as Amit talked about, well, we have our perspectives with our stodgy 100-year-old systems and things like this, but let's not let those drive our decisions and actions, but rather find out what the customers prefer. Do Capital Grill customers prefer the fancy menu, or I had a recent experience where there were no prices on the menu. It made me very uncomfortable, and everybody we were eating with, but then we thought it through, and then there was a QR code, and you go, if you want prices, they can change those prices at will, without having to reprint menus and everything. It's brilliant. Except it made me feel uncomfortable as a customer, right? And so it's just, there could be things, and it's not that hard to figure out what customers want. We just have to find ways to.
I think the QR code has proliferated because it's easier for the restaurant, and that's another takeaway from that, right?
Yeah,
So much easier for them. But is it what the customer wants?
Yeah,
Exactly.
yeah, that's such a great example, truly. And then I love that, Rose. I'm gonna steal that when I'm trying to personify this to people. So thank you for that illustration. Chris, there's two questions that came up at the very beginning. So thank you. One was from Cottery and one was from Anonymous, but would love to have you weigh in on, first of all, unique challenges of policy life cycles for small businesses. So I guess, the small business, and both my parents own a small business, so I could totally relate to this too, but the unique challenges of that. And then the second one, if I go all the way up, is, when you're collecting risk data and it's, what if it's being disputed by the customer and or agent, especially if they can prove that the data is wrong. So let's say that you're not asking them for the data and you're getting it from a third party or some other, I'll call it highly credible data source, but it's not credible and it's being challenged. How do you handle that? So if I could tee over those small business questions to you, that would be awesome.
Absolutely. And just some context on the policy lifecycle question. I'll frame it for everybody. The challenge small businesses have is they ebb and flow with the economy. So they'll scale up, scale down employees. They'll go into new activities depending on market demand, right? Their payrolls and their number of employees flex with this. They may open up new locations or pull back from locations. So they've got multiple sites that they're working with. And all of these data points are interconnected to the different products, the ratings, and the underwriting decisions that you're making across workers' comp, general liability, commercial property, for instance. So we really need to figure out a way to balance the needs of the customer, which are making sure that they have the right coverage and they're able to interact with an insurance company in a compliant way. So we're able to collect all information we need, against the desire of the insurance company to get really detailed information from the customer, really thinking within a vertical line of coverage view, right? Within any particular line of coverage, we want deep information to know as much as we possibly can for risk assessment. So really the way we balance that first is in data design. It's very difficult to be customer-centric and have a customer-centric view of all of your different policy lifecycle touch points if you don't connect your policies back to a single customer ID. So you can see and expect and forecast all of these necessary customer touch points that you're going to have into the future. Another key part of data design is thinking about all of these things that can change from a customer and making sure that you have one, I'll say, singular data point in your data systems that accept multiple points of entry for this data point to change. We're integrated with some key partners that provide us information about our businesses because they use these key partners for different services, such as payroll or providing technology services for the businesses. Where we see opportunities, we collect information automatically about the business with the business's consent, and then we flood that information through into the rating and underwriting decisions for all of our products simultaneously as a means to reduce that burden of ever having to go back to a customer and ask a question a second time because it's needed in a second product line. I think the final piece of this that Next is really focused on is ensuring we see those holistic customer touch points across different products and really scheduling communications in a way with customers where we set expectations at points in time that we need to collect information And then use clear, simple language, as Amit was speaking to earlier, so that the customer really understands at points in time we do have to reach out from a regulatory or compliance perspective to verify certain information, and let them know we try to minimize communications and respond to them otherwise to meet their needs when and where they're looking for service or looking for information about their policy.
I love that. Thank you, Chris, for those really deep. And I think that can be applied and of course extended well beyond the small business, which at the end of the day, curated data collection and curated algorithms is something that, like, when I was spending a little, bit of time working on, data science, and a team had a dotted line into me and was working on all these things, I kept asking, and, I get to be the like dumb person in the room saying, like, I'm not a data scientist. Are you doing anything other than regression analysis? Are you reverting to the mean? Which is going to come into another question that we're going to take from the audience. And so to your point about each business is unique, each person is unique. We even covered the QR code with the restaurants, and, everyone's experience is differentiated, and it's not differentiated on these bright lines that we traditionally used to put people in our industry, which might be age-based, it might be gender-based, it might be size and type of property, or like whatever. Like, it's differentiated now, like more at someone's own psychology. Like Tom was like, I didn't like going to a restaurant where there are no prices on the menu, like, I'm out of here. Like, who knows how much I'm going to spend on this, because we all grew up with a different psychology. Like that meant market price. What does that mean, right? But with that, I would love to field this question, and I would love each of you to spend maybe a minute answering it, which is what has worked in getting customers to, I'll call it, this question says adopt new technology. I'll extend it to say trust and empower the, in the usage of that technology, right? So how have you all extended it beyond just here's some new tech? And I'm going to start with Rose. I was going to start with Chris, but Chris just ended, so I'm going to give him a minute. I'm going to start with Rose, and I'd love to go from Rose to Tom to Amit to Chris on this, if you guys don't mind.
So this one's kind of a touchy subject, because the question I get all the time is, you are stressing that technology is important for risk reduction and that your customers should adopt technology. But can I get a discount? Can I get safe drivers save 40%? That kind of thing. We've all heard that commercial, right? And what I say is the benefit of technology adoption is going to be so much greater on the back end, on the claim side, than we could ever give you a discount on the front end, that you're asking for the wrong thing, right? So while we are working to consider the effect of risk reducing technology on the front end of the premium, and that takes into account, we have risk engineers that have been doing this for years, taking a look at the process and procedure of the way we manage our risk and baking that into the way we rate the premium, right? This is just another piece of that, the technology. It's a natural evolution of what we've been doing, for what we've all been doing as an industry for many, many years. But I think they kind of want to see it like they see it in their consumer world, which is, oh, you plug this thing into your car and you get a discount. Well, I just keep trying to emphasize that the incidents that you're preventing and the loss reduction that can occur as a result of digitizing and adding your technology into the way that you manage your risk will be far and above anything you can see off the sticker price. I just keep trying to focus on that, because I really do believe that that's the silver bullet right there.
Yeah,
So an example might be, I just want to take it one step further now. That an example might be plugging something into your car and getting the insurer to take a look at the data around how you drive and give you a discount upfront on your premium. How big would that discount be compared to the type of technology that might buzz your steering wheel when you're leaving the lane, or radar that might tell you when you're getting too close to the car in front of you? Other telematics solutions that help you in real time avoid an accident, way better for your wallet than a couple bucks off of your yearly premium, right? And so I'm trying to encourage folks to think about it that way.
Tom, over to you. And just if we could keep it to 60 seconds, because we're at 6 minutes before the end, and I want to make sure it doesn't cut off before we wrap.
I'll try to just work in bullets here, right? Fit for purpose, right? If you got a technology that has no purpose, why in the world would somebody adopt it? Always ask the question, what's in it for them? Why would they want to adopt it? we often assume the financials, as Rose elegantly put it, oh, you're going to save a few bucks at the cost of what? And then mistrust issues come up and so on and so forth. I don't need you to be my babysitter if whatever. And this goes to things on your phone, on your car, so on and so forth. So, what's in it for them? Is it something that, hey, now I'm going to give you feedback on something, and that's going to be useful, that could change behaviors later, and so on and so forth. And then alignment, right? Am I in an animus relationship with my insurance company, or am I in a partnership with my insurance company? If we're all focused on loss mitigation and improved lives and so on and so forth, that's fine. But if I feel like there's a disconnect, if I feel like you're trying to get one over on me, I'm probably not going to be a huge adopter of whatever technology you're trying to get me to use.
Thank you so much, Tom. Over to you, Amit.
Yeah, so like I think Tom hit the key bullets right on the head. So I totally agree with him. I think Rose brought up a very interesting point. If you find yourself caught in a conversation around pricing and discounts up front, you haven't solved the value problem, because it's that most customers don't care about the initial discounts. They do when they don't understand the value problem. Okay, and so think about it from a life insurance perspective. We encourage our customers to use digital technology and engage with us digitally, not to give them a discount on a premium of a life insurance policy, because then if we're doing that, it's a commodity. It's like we haven't conveyed the overall value. The value comes from someone who owns a life insurance policy, who owns assets and wealth, can see it all on their app at any point in time, the cash value, the death benefits. If they decide to buy a house, to be able to be navigated through that app to a partner or an affiliate that helps them purchase a house or address a student loan, et cetera, et cetera. That's the value of technology, right? And so I think if you find yourself fighting a battle around discounts, then I think you haven't conveyed the proper value. So
Great. And I just have to hit on again what Tom said about all these blinky shiny objects, which are solutions running around looking for a problem, making sure that you're focused on what problem are you solving. Yeah, that's cool, but does it solve a problem?
Yeah,
100%.
Chris, we'll wrap with you. So just on your thoughts on this.
I agree with the sentiments of the panel. We view the value prop as providing clear, understandable protection, making the purchase process and the ongoing customer service interactions easy for customers, and making it easy for them to manage their portfolio of products, right? Our customers, we typically see restaurant owners trying to purchase or manage their coverage late at night, between 11 p.m. and 1 a.m. after a restaurant closes. We see construction general contractors trying to purchase or service from job sites on their phone in between, different, parts of the day. So that's where we see the value of technology, of simplifying customer processes, which ultimately reduce our operational costs, and we can embed that back into stable and competitive prices.
Thank you. So sorry, this is such an engaging conversation, and we only have 2 minutes before the recording and the webinar will automatically stop. So first of all, thank you. Amazing insights from Rose, Tom, Amit, and Chris. I'm so inspired and invigorated by all that you all are doing in the industry and on behalf of the industry. For those of you who found this webinar interesting and you were able to attend, please join us at the upcoming Reuters conference in Chicago, April 12th and 13th, Insurance AI and Innovative Tech. You will be hearing deeper discussions from some of these exact panelists, and we will all be there trying to continue to drive these missions forward. I think we covered most of the comments. I know we didn't get to all of them, but hopefully we covered conceptually most of them. And thank you all again. As you hear, it's not about the shiny tech. It's about delivering the human experience that people, I love to say, want, not need. So with that, thank you all for being here. It's truly been a joy.
Thank you.
Thanks.